Okay, on that note, let's bring in Kevin Green, who joins me now for a look at what we're seeing as far as the reaction in the market this morning. So stocks pulling back, no doubt, on some of these comments that we heard from David Solomon and also Ted Pick out in Asia overnight, sort of talking about the potential for a 10 to 20% correction over 1 to 2 years. What do you make of that, KG?
Yeah, I think it's the prudent thing to do if you are a CEO, especially one, a couple of CEOs from very major financial firms here. David Solomon talking about things run and then they pull back so people can reassess. 10 to 15% corrections in a bull market are actually normal, and this would actually be a really healthy sign for this market. Maybe take a little bit of the froth out, reevaluate when it comes to valuations just in general, and then obviously increasing exposure. He also stated that staying fully invested is going to be very key for long-term investors, and they continue to talk about the fact that this could be an opportunity over the long term here. So a correction of 10%, 15% over the next 1, 2, or even 3 years seems like it's a little bit normal, but obviously the market has pulled back here a little bit here. Sam, I would kind of just set this up. What actually kind of is the timeline that we've seen over the last couple of trading sessions? On Friday, we did see a spike in the repo market, in the repo facility. That actually created a little bit of a stir over the weekend that maybe some financial institutions really needed some capital. We started seeing high yield credit spreads starting to inch to the upside as well. That usually leads to equity volatility, which is exactly what we have seen. And we are starting to see a little bit of a rotation in selling. And this is kind of the environment that we are in right now. But if you kind of look at the technical landscape, we're still making higher highs. We're still making higher lows. We're still holding the 20-day moving average for the S&P 500. And you are starting to see volatility back off here a little bit. So I think this is probably just a little bit of a churn as we prepare for the holiday trading season, and this is not outside of the norm that volatility does kind of creep in, and you are starting to see those reverse repo that activity within the reverse repo market starting to level back to the downside as well. That should also then bring debt volatility to the downside. That also could lead to equity vol moving lower as well. So I think this is a blip on the radar for now, and you should treat it as such if you're a trader in this market.
Yeah, the VIX picking up right now. We're at 18 at this stage. I mean, people have been warning about the fact, or at least saying that we're perhaps due for some kind of correction for a while now. We got through a seasonally typically weaker September and then October as well. And, obviously November being traditionally a good month for stocks. It's interesting just to see how long this will last. But as David Solomon was quoted as saying, I mean, this gives an opportunity for a pullback so people can reassess perhaps. I mean, we know that Palantir has been one of a valuation story as well. You and I were talking about that yesterday when we broke those numbers, and it's been interesting to hear Alex Karp with some sort of choice language this morning around Michael Burry's position as well. So a lot of moving parts for these markets. Just switching gears though to the government shutdown. I mean, we know that it's in its sort of 35th day by now. No jolts or factory orders data that were due to be released today as well. But how long do you think the markets can sort of take the lack of data that we're getting, or the data void, or more so perhaps importantly the Fed with the upcoming December meeting?
Yeah, I think the market's actually okay with the lack of data because it does take a little bit of volatility out of the market, to say the least, up until a point. And I think the closer and closer that we get to Thanksgiving, the closer and closer that we get to the holiday season and the travel season, and we start seeing the material impacts when it comes to airports. We're seeing that right now. It's just going to get worse as we get closer to Thanksgiving. And then you also start seeing the other effects within very small communities and in rural communities as well. Once that actually starts to occur, you'll start seeing congressmen and women starting to come back into Washington and try to hash out a deal, because at that point in time it's going to deteriorate on both sides, and then favorability ratings will start to tank even more than what they're at right now. So we're probably at the middle stage or 75% of the way there when it comes to the shutdown. And then when you're looking at the Fed, they do have a lot of privatized data as well. Lisa Cook kind of talked about that. She doesn't really need the monthly jobs report from the government to really see that hiring is starting to slow, and that's a indication that maybe the labor market itself might be cracking, and you are still seeing maybe some cautionary tones when it comes to economic expansion and growth here in the United States, as it is a little bit more lopsided to the AI trade. Now, inflation is still going to be a focus, but if we do see maybe tariffs coming back here a little bit or pulling back a tad bit here, is that really going to outpace the uncertainty when it comes to the labor market? I still believe, and if you look at the Fed Fund futures and the probabilities, the market is still saying that the December rate cut is still going to be on the table level just because of the trajectory that we're on right now. So did it cause a little bit of angst? It probably did. But when you're kind of looking at the overall landscape here, the labor market still seems to be front and center for a lot of these Fed members that have had commentary over the last day or two, rather than inflationary fears that we are going to see a massive reacceleration over the next couple of months.
And the alternative data that we've been looking at certainly suggests that trend as well. I mean, not to mention you've had these huge corporates slashing workers too. But just as we're really in the thick of the earnings season, you've got a couple of names on your radar that are perhaps a little bit under the radar that are reporting tomorrow, I see in the insurance space and also uranium. Why are you looking at those companies, KG?
Yeah, so one of them is going to be Humana. Now, we have already seen United Health's earnings. They weren't that great, but Humana is a little bit different when it comes to the fundamental structure of their company. And they do have, obviously, exposure when it comes to Medicare and Medicare Part D type of plans here. And if you actually do see a little bit of a resurgence when it comes to onboarding new customers and then also kind of readjusting their tiers for this broader group, and they're starting to take away maybe some market share from United Health, that could actually be a tailwind for Humana. Now, Humana is a very low beta trade, meaning that it really trades on its own. It really doesn't need the S&P 500 to move higher or to move lower. And in fact, it's up around 1% so far in today's session. The technical structure here is also very interesting when you're looking at this stock. It is in a little bit of a flagging pattern, potentially a little bit of a bull flag pattern if you're counting the lows. And if we do get a really decent report, you can see this re-rate to the upside. This could also carry a lot of the health insurance stocks with it, which could lead healthcare a little bit higher as well. There's been a lot of focus on the XBI and looking at a lot of these pharmaceutical names, a little bit higher beta names here. But when you're looking at market cap weighted indexes for healthcare, it's really the health insurance companies that really can push that higher. And I think Humana is going to be a good sign for that. We also have CCJ or Cameco. Obviously, they've been in the news when it comes to uranium deals with the United States government and Westinghouse. What are they going to say on the conference call that maybe foreshadows additional partnerships with not only the United States government, but also other governments around the world as well? This one has run fairly aggressively here, but it does have the thematic trend in the sales, if you will, for this name. So let's see what they actually report on earnings. And then also if they make any type of mention with Russian supplies of uranium actually being cut for the United States, that could actually be a tailwind for them with their Kazakhstan operations as well as their Canadian operations.
Okay. Couple of earnings names on your radar there, KG. I'm just wondering what you're seeing as far as the charts are concerned. What's going on with Bitcoin? I mean, it seemed to be sort of stuck around that 110 level. It's under pressure this morning. We're at 104,000 right now. It's interesting just as far as, how this, asset class sort of moves, how it trades, risk on. But not necessarily what we've seen as far as the pattern in recent sessions. Speaking to, obviously, Michael Saylor in recent days, who seems to believe that we could be looking at 150 come year end. But it just doesn't seem to be getting any momentum at this point. What are your thoughts, or what are the charts telling you?
Yeah, it is stalling out here. Let's see if it's going to be able to hold that 100,000 level when you're looking at Bitcoin or even Bitcoin futures. I mean, we have a monthly chart up right now from 2017 to the present. If you kind of look at that MACD, that's a bottom indicator there. It does appear that the monthly chart does want to cross in a bearish formation, and maybe we do get a pullback to this 20-month moving average at 88,700. Bitcoin, Ethereum, Ripple, whatever you want to look at as far as the crypto space, they are still really good leading indicators for equity volatility in the market. And Bitcoin has been waning here a bit, even before we started seeing the S&P 500 pulling back here. You also have this megaphone pattern as well. So this is a situation where you consider it a flag right now, or a bull flag pattern. You will see some volatility. That's what that megaphone pattern is really trying to tell you. But if we don't get a lot of momentum, we don't get to that 150,000 level over the next couple of months here, and you see that bearish MACD cross, that's where you could see a decent pullback here. Maybe buyers find that as an opportunity over the next couple of months.
Okay, we're watching the price of Bitcoin this morning. Thank you so much for that, KG, and getting us across some of those key stories in the market this morning for us. Appreciate it.